Hey everyone, welcome back to the channel. Today we're tackling one of the most important topics in the world of cryptocurrency, security. You've heard the phrase, not your keys, not your coins. But what does that really mean? And more importantly, how do you make sure your Bitcoin is safe? In this video, we'll break down different types of Bitcoin wallets, explain the crucial difference between hot and cold storage, and give you the best practices for protecting your assets. First, let's get a quick but crucial concept out of the way. When you own Bitcoin, you don't actually own a physical coin. What you own is a private key, a long string of characters that gives you access to your Bitcoin on the blockchain. Think of your public key as your bank account number and your private key as the PIN for your ATM card. You can share your public key with anyone, but you must keep your private key secret. Losing your private key means losing your Bitcoin forever. Having your private key stolen means your Bitcoin can be drained in an instant. This is why storage is so critical. The world of Bitcoin wallets isn't a simple one-size-fits-all scenario. Think of it as a spectrum of convenience versus security. At one end, you have wallets built for speed and ease of use, and at the other, you have wallets designed for maximum security. We can categorize them into two main types, hot wallets and cold wallets. Let's first talk about hot wallets for convenience and daily use. A hot wallet is any wallet that is connected to the internet. These are your everyday wallets, perfect for small amounts of Bitcoin you might want to use for trading, buying, or frequent transactions. Hot wallets can be mobile apps, desktop applications, or even a wallet on a centralized exchange like Coinbase or Binance. They are convenient, easy to use, but their constant connection to the internet makes them more vulnerable to hacking, malware, and phishing attacks. Imagine it like keeping a few dollars in your physical wallet. It's convenient for daily purchases, but you wouldn't carry your life savings in it. It's convenient and easy to use for quick transactions, but it's more vulnerable to online threats. It's best for small amounts of Bitcoin and active trading. While some might think using an exchange wallet is the easiest option, it's important to remember a key distinction. When your Bitcoin is on an exchange, you don't actually hold the private keys. The exchange does. This means you are trusting a third party to manage your security, making you vulnerable to potential hacks of the exchange itself or to having your account frozen. It's a trade-off of convenience for control. And now, let's talk about cold wallets, the gold standard for security. A cold wallet or cold storage is a wallet that is completely offline. This is the gold standard for security, especially for storing larger amounts of Bitcoin for the long term. Since a cold wallet is not connected to the internet, it's practically immune to online attacks. The most popular type of cold wallet is a hardware wallet, which is a physical device that looks like a small USB drive. You plug it into your computer only when you need to make a transaction. The private key never leaves the device, even where you're connected to your computer. This is why they are so secure. The private key is isolated from any potential online threats. Other, less common forms of cold storage include paper wallets, where you physically print your public and private keys on paper, and even air-gapped devices that have never and will never connect to the internet. While a paper wallet is a form of cold storage, it comes with a unique set of risks, such as the paper degrading or being lost in a fire. For most people, a hardware wallet is the ideal solution, providing both high security and a user-friendly interface. Cold wallets are the most secure method offline storage protects from hackers, but they are less convenient for frequent use and require a physical purchase. They are best for large, long-term holdings. So what's the best strategy? The common advice from experts is to adopt a tiered approach, similar to how you manage your physical money. Keep the majority of your Bitcoin, your long-term savings, in a hardware wallet. Think of this as your bank vault. For smaller amounts you might want to use for trading or everyday spending, keep them in a secure hot wallet. This is your regular everyday wallet. Regardless of which wallet you choose, there are some essential security best practices you must follow. First, secure your seed phrase. When you set up a non-custodial wallet, you will be given a seed phrase, typically a list of 12 or 24 words. This is your master key. Anyone with this phrase can access your funds. Write it down on paper and store it in a secure, fireproof, waterproof location. Never ever store it on your phone, computer, or in the cloud. It is the single most important piece of information to protect. Secondly, use two-factor authentication or 2FA. Always enable 2FA on any exchange or service you use. Authenticator apps like Google Authenticator or Authy are generally more secure than SMS-based 2FA, as SIM swapping attacks can be used to hijack your phone number. Number 3. Be wary of scams. Never click on suspicious links and never share your private keys or seed phrase with anyone. Reputable companies will never ask you for this information. Be cautious of giveaway scams or promises of guaranteed returns. If it sounds too good to be true, it probably is. And number 4, buy directly from the manufacturer. If you decide to get a hardware wallet, always buy it directly from the official company website like Ledger or Trezor, not from a third-party seller on Amazon or eBay. This prevents the risk of a tampered device being sold to you with a pre-configured wallet. Navigating the world of Bitcoin storage can seem intimidating, but by understanding the difference between hot and cold wallets and following these simple rules, you can protect your assets and truly become your own bank. Of course, none of what I'm saying in this video is financial advice, and make sure to always do your own research. If you enjoyed this video and you want more videos about Bitcoin, investing in Bitcoin, storing Bitcoin, and more things about Bitcoin and the crypto market in general, make sure to subscribe to the channel. Thank you for watching, and I will see you in the next one.